While gold has been consolidating over the last 2 months, it's been on the move in 2019. The SPDR Gold Shares ETF GLD is holding at its highest level since the spring of 2013. And here to share insights about the precious metals gains this year and where gold could be headed in 2020 is George Milling-Stanley, Chief Gold Strategist at State Street Global Advisors. Thanks so much for joining me today, George.
Thanks for inviting me.
So, as I said, gold's been on the move this year, but taking a step back and looking at the bigger term picture, what does the move really mean in terms of what we've been seeing over the long term for gold?
No, I think it's a pretty substantial move. I mean, it's an inflection point, if you like. Gold was holding in a very, very narrow range for the 6 years from the spring of 2013 right up until June of this year. And every time the price popped its head above the $1,350 area, speculative interest would play whack-a-mole and knock it back down. They didn't do that in June when the price started to move up. And it's important to try to understand why. I think the suggestion from Jerome Powell that the Fed was going to make a mid-cycle adjustment, I believe it was called at the time, and lower interest rates at the July meeting was probably the proximate cause for why gold has gone up a good deal since then. We're now kind of filling in a bit of the gaps that we left behind, having moved $200 above that trading range that have been there for 6 years. And I think that's actually very healthy. So I'm kind of pleased with what gold's been doing recently.
All right, and gold is, of course, known as a very popular safe haven asset. And we have seen a lot of volatility coming into the market over the last few months. That may be subsiding a little bit now, but do you think that that kind of relationship between gold and volatility still exists to some extent or not?
Oh, no question. I mean, volatility in other markets has been one of the keys. There have been a lot of different things behind gold's move up. First, there was the interest rate move, and then a subsequent move in September, and markets are expecting this week yet another cut. And then negative interest rates on fixed income securities all around the world. That's another driver towards gold as a safe haven. Volatility in the equity markets. You know, the best news in markets is that equities have gone up for 10 straight years, but nobody in their right mind expects that to be repeated over the next 10. So people are very, very concerned, and that level of concern drives people toward safe haven assets like gold.